Some of you boom busters may recall when we did our weekly market wrap last week, I noted some South African gold-related companies and said we'd have more on gold. Well, as promised, here we are. And we're joined by Peter Schiff, the CEO of Europe Pacific Capital. Peter, welcome. Glad to have you as always. Before we get your thoughts, we will be hold on gold. What's your reaction to that news about those JP traders, the one particular trader on silver?
Well, you know, there's long been rumors of manipulation when it comes to the gold and silver market, and some of the rumors are probably true, but I don't think that is the primary reason that the price of gold and silver have been going down. I don't think it's just manipulation. I think people just are completely clueless with respect to what's actually going on in the world. They don't understand the U.S. economy, they don't understand the Fed, but they're about to get a rude awakening, and the smart money is buying gold, whether it's being manipulated or not in the short run. Gold and silver are both going way up in the long run, and the long run may be here much sooner than people think.
Just as a quick note on silver, Peter, you know, when I was in my former job, I called for an investigation into silver. I was the guy that did it. It took 5 years, and we found all sorts of evidence of attempted manipulation and manipulation, but not enough to actually prosecute. So from a personal perspective, I'm glad to see this going forward, at least in some degree. On gold, we saw gold prices hit a 4-week low of $1,201.40. That's $1,201.40 yesterday as the price traded lower for 7 of the last 8 trading sessions. But today, it was trading up midday at least, $2.40 on COMEX. That's a commodity exchange in New York. What do you make of gold prices these days? Are we about to see an upswing as markets appear to be ready for some correction?
Well, you know, I think we're up about $10 today, so we're back around 1,210. But, you know, the U.S. stock market is looking very weak. The bond market, you know, you want to talk about manipulation. It's the central banks that have been manipulating bond prices and interest rates far more than traders were able to manipulate gold and silver. But I think the air is coming out of that bubble. And as this U.S. stock market implodes, as more and more people realize that a massive recession that is even bigger than what we now call the Great Recession of 2008 is actually around the corner, and this credit bubble is far bigger than the one that popped in 2008. That one produced a financial crisis. This one is going to produce something much worse. So as people actually figure this out, they're going to be buying gold, and they're going to be buying it in a big way. And today's small move up is just a taste of what's coming.
Hey, Peter, can you give us just a real quick take on where you think we should look at gold being? I agree. I think it's going to go up. But, I mean, where would you say gold would be, say, a year from now?
Well, look, I mean, I don't know where it's going to be. I think it's going to be higher. It could be a lot higher. I mean, it could be, you know, $1,000 higher. I don't know. It all depends on how this thing blows up. I think it's going to blow up in a big way. This is a huge credit bubble. We're going to see waves of foreclosures and insolvencies and bankruptcies, not just companies, but municipalities. You know, it's not just Puerto Rico where I'm recording this from or broadcasting from. You've got a lot of major cities in the continental United States that are a couple more interest rates away, hikes away from bankruptcy. And look at these underfunded obligations, the pensions, the health care. Look at what's going on with the natural disasters. Look at this, you know, catastrophe in California, both northern and southern California. In addition to the loss of lives and the human tragedy, there is a financial cost to this that really we can't bear. So all this stuff is coming to a head, and it all depends on when it blows. And when it does, gold's going ballistic.
Absolutely. We're going to have to leave it there. We hope you'll come back. Peter Schiff, the CEO of Europe Pacific Capital. Thank you for joining us, Peter.
Natural disasters. Look at this, catastrophe in California, both northern and southern California. In addition to the loss of lives and the human tragedy, there is a financial cost to this that really we can't bear. So all this stuff is coming to a head, and it all depends on when it blows. And when it does, gold's going ballistic.
Absolutely. We're going to have to leave it there. We hope you'll come back. Peter Schiff, the CEO of Europe Pacific Capital. Thank you for joining us, Peter. Of Europe Pacific Capital. Thank you for joining us, Peter.